In my last video, I talked about qualified charitable distributions, but you have to be 70 and a half or older in order to utilize a qualified charitable distribution. What if you're under that age? What if you're in your late 50s or your early 60s, mid 60s, getting ready to retire or about to retire? What if you're at a point in your career where you have some big bonuses and income, or you're going to have a big severance package? There's a lot of things that could push your income much higher. A donor advised fund might be beneficial to you. A donor advised fund is a charitable giving fund that is managed by a custodian. It can be somebody like Fidelity or Vanguard or Schwab. And that donor advised fund is set up in order to receive your contributions. The money is given irrevocably. You can't take it back to use it for something else. But then the money in that account can grow and can be distributed to charity over however many years you want that to be. It can be in 1 year, it can be spread out over 10 or 20 years. And that donor advised fund then allows you to do your charitable giving out of the fund, but you get the tax benefit for that contribution in the year that you make the gift to the donor advised fund. Now, a lot of times where I am using this with clients is when somebody's retiring and they're going to have a big deferred comp payout in 1 year, or they're going to have a big severance package payout. These are amounts that push their income up into a very high tax bracket, and by doing the donor advised fund, we're able to bring that back down to a more reasonable tax bracket and then set up the giving for the next 3, 5, 10 years, whatever the case may be, and bring them up to the point in time that they're going to start those required minimum distributions. And so it's a way of still giving the giving that you want to do, but managing the point in time that you get to take that tax deduction so that it lines up with a year where you're going to have big income. Now, you can give a lot of different things to a donor advised fund. You can give cash. You can give stock that you have that has a gain. It eliminates the gain on the stock. The donor advised fund gets to receive the stock. They get to cash it out. They pay no tax on the gain, and you get to deduct the full amount provided that it's within your income tax limits. And there are some limits on how much that you can deduct. And so you'd need to run the numbers, but that can eliminate tax on the gain on those stocks. And then you can just repurchase those same stocks if that's a good holding for your retirement account. You can use the cash that you got from your deferred comp payout or from your severance package or whatever other source that you have. You can use that to repurchase those stocks and have a step up in cost basis. So it's a big benefit all the way around. You can also give private company stock, and you may own a business. You may have assets that are harder to sell, and you have a big gain in those, and it is possible to give those to a donor advised fund as well. It takes a little bit of extra planning, and you have to get, of course, your tax advisor and your other advisors involved in that so that it's a good decision all the way around, but that can help you reduce the tax on exiting your business. So a donor advised fund is a very beneficial planning tool that you can use to minimize your taxes as you're transitioning into retirement and set yourself up to have the most money in your pocket so that you have the most income for your retirement. Now, I hope that was very helpful. If you have any questions, please feel free to shoot me an email. Be happy to talk to you about this in more detail, and subscribe to this channel so that you don't miss any of the other videos so that you're on your best path for your retirement.